Hi everyone, I'm Zayd Haji, a research professional with a master's in finance from NMIMS University and specialized certifications in New Age banking and Islamic finance. I've developed expertise in reading and analyzing company financials, creating compelling data visualizations, and conducting detailed SWOT analyses. I also specialize in deciphering promoter shareholding patterns and extracting valuable insights from investor presentations and annual reports. Today, we'll apply these skills to research Aegis Logistics Limited. Let's dive in. Disclaimer: our research employs the Indian Government Budget Report, Indian Economic Survey reports, RBI reports, company annual reports, and online tools such as Screener.in and Ticker Phonology is intended solely for educational purposes. Our research must not be construed as stock recommendations or investment advice. It does not constitute financial or investment advice and should not be used as a basis for making any investment decisions. Aegis Logistics is an India-based company, originally incorporated in 1956 and began its journey as a chemical manufacturer in 1967 under the name Atul Drug House. The company transitioned into the logistics industry during the 1996-97 period and later divested its chemical manufacturing operations in 2005. Based in Mumbai, Aegis Logistics Limited has established a strategic alliance with SR Oil Limited, and its shares are traded on the Bombay Stock Exchange, National Stock Exchange, Ahmedabad Stock Exchange, and Delhi Stock Exchange. Aegis Group plays a pivotal role in India's downstream oil and gas sector. Its flagship company, Aegis Logistics Limited, is the nation's leading oil, gas, and chemical logistics provider. The company aims to be the industry leader by focusing on delivering superior customer service with a strong emphasis on quality, safety, and environmental standards. The group comprises 5 distinct but interconnected business segments and operates a comprehensive network of bulk liquid handling terminals, liquefied petroleum gas (LPG) terminals, filling plants, pipelines, and gas stations. These facilities enable the efficient delivery of products and services to a client base that includes many leading industrial companies in India, as well as individual retail customers served through its Aegis Autogas stations. The Aegis Group also extends its operations internationally through its sourcing and trading subsidiaries in Singapore. Aegis is recognized as India's leading oil, gas, and chemical logistics company, managing 5 distinct business segments. These segments include liquid logistics, bulk liquid handling terminals, gas logistics, LPG terminals, filling plants, pipelines, gas stations, EPC services, engineering, procurement, and construction, retail LPG, Aegis Autogas stations, marine services. A notable joint venture in LPG sourcing with Itochu Corporation, a Japanese multinational, allows Aegis to procure LPG at competitive prices. In 2021, Aegis entered a joint venture with Vopak, the world's leading tank storage company. This partnership aims to expand their product offerings in chemical and gas storage and explore growth opportunities in renewable energy. The leadership team of Aegis Logistics is spearheaded by its promoters, who have been instrumental in guiding the company's strategic direction and growth. At the helm is Raj K. Chandaria, who serves as the chairman and managing director, providing visionary leadership to drive the company forward. Supporting him is Sudhir O. Malhotra, the Chief Executive Officer, whose expertise ensures the seamless execution of Aegis's business strategies. Further strengthening the leadership team are Rajiv Chauhan, President of Business Development, and Keshav Shenoy, President of Strategic Planning. Both play crucial roles in identifying growth opportunities and ensuring that Aegis Logistics remains at the forefront of the logistics industry. Rounding out the executive team is Murad M. Muladina, the Chief Financial Officer, who oversees the financial health and strategic financial planning of the company. Together, this team of promoters has been key in positioning Aegis Logistics as a leader in its field. The shareholding pattern of Aegis Logistics reflects a strong promoter holding of 58.0%, indicating significant confidence and control by its founding members. Foreign institutional investors, FIIs, hold a substantial stake of 17.65%, showcasing international interest and trust in the company's growth prospects. The public holds 17.55% of the shares, indicating a broad base of individual investors. Domestic institutional investors, DIIs, account for 6.71% of the shareholding, further contributing to the company's diverse ownership structure. With a total of 62,660 shareholders, Aegis Logistics enjoys a wide base of investor support. The company's commitment to quality and safety is underscored by its credentials. Aegis Logistics has received the OASAS 18001 2007 certification for occupational health and safety, ISO 9001-2008 for quality management, and ISO 14001-2004 for environment management system. Additionally, it is recognized as a responsible care committed company, affirming its dedication to maintaining high standards in health, safety, and environmental management. Company products, services. Key points. Aegis Logistics Limited is a leading player in India's logistics sector, specifically within the oil, gas, and chemical industries. The company operates a comprehensive network of bulk liquid handling terminals, liquefied petroleum gas (LPG) terminals, filling plants, pipelines, and LPG gas stations, facilitating efficient delivery of products and services across the country. Business model. Aegis Logistics is primarily engaged in the midstream and downstream sectors of the oil and gas industry, covering the entire logistics value chain from sourcing and terminaling to distribution of LPG. The company also provides import, export, storage, and logistics services, handling Class A, B, and C products, including various chemicals, petroleum products, and vegetable oils through its liquid business division. Liquid Logistics, 30% of FY24 EBITDA. Aegis provides import, export, logistics, and storage services for liquid chemicals, petroleum products, and vegetable oils. The company operates terminals at 6 ports: Mumbai, Kandla, Pipavav, Mangalore, Haldia, and Kochi, with a total operational capacity of 1,829,000 KL. LPG segment, 70% of FY24 EBITDA. The company is involved across the entire value chain, from sourcing and terminaling to distributing LPG to industrial and retail clients. Aegis has a total LPG static capacity of 119,000 megat with an annual throughput of 9,600 megat. Gas sourcing significantly contributes to revenues, although profit margins are small as the company earns a fixed sum for this service. LPG retailing. Aegis operates its LPG retail business through 142 autogas stations in 10 states and a network of 290 LPG distributors across 140 cities in 15 states. The company runs 37 LPG bottling plants, serving both commercial and domestic LPG markets. LPG retailing is the segment with the highest profit margins. Aegis saw a substantial increase in distribution volumes to the industrial segment in FY23 following the commissioning of its Kandla LPG terminal, where LPG is used as a cleaner alternative to dirty fuels. The joint venture with Vopak houses the LPG transmission and bulk liquid storage business across all of Aegis's ports except Mumbai. Aegis Vopak Terminals Limited allotted 490,000 equity shares at INR 10 each to Vopak on May 25, 2022, for a consideration totaling 1,098.34 crore, representing a 49% stake in the joint venture for Vopak. Project Gati. A capital expenditure of Rs 4,500 crore is planned under the joint business plan with JV partner Royal Vopak to be implemented from 2023 to 2027. In June 2023, Aegis entered into a share purchase agreement with Vopak India BV for the transfer of 13% shares held by the company in Aegis Vopak Terminals Limited to Vopak for a total consideration of 58 crore. Slide 5. Plant and location capacity expansion liquid division. 1. Kandla Port. 80,000 KL capacity commissioned in FY24, with an additional 25,000 KL capacity to be operational in FY25. 2. JNPT Port. 110,000 KL capacity expected to be commissioned in phases and fully operational by early FY25. 3. Mangalore Port. 79,000 KL operational in FY24, with an additional 71,000 KL's capacity to be operational in FY25. 4. Kochi Port. Acquired a 16,000 KL liquid storage terminal in FY24, with an additional 25,000 KL's capacity operational in FY25. 5. Haldia Port, 50,000 KL capacity completed. 6. Gujarat, capacity expansion of 36,000 KL for ammonia at an approximate cost of 500 crore to be completed by FY26. Post-expansion, the liquid storage capacity will reach approximately 2 million KL. Gas Division, 1. Two major cryogenic LPG projects at Pipavav and Mangalore with capacities of 45,000 MT and 85,000 MT respectively are progressing well. Updates. 1. Completion of the Aegis Vopak joint venture. 2. Execution of 3 acquisitions totaling 110,000 KL of liquids capacity at Kandla, Kochi, and Mangalore ports. 3. Kandla LPG bottling plant is fully operational. 4. Establishment of a foothold into the second port of Mumbai, JNPT, with a 110,000 KL liquids terminal as the first step. 5. Secured and progressing connection to LPG pipeline grids for Pipavav and Kandla terminals. 6. Completed liquids expansion at Haldia, Kandla, Mangalore, and Kochi. 7. Completion of the Pipavav LPG bottling plant. 8. Undergoing the largest capex implementation in the company's history. 9. Pipavav jetty now handling VLGCs. 10. M&A opportunities include the acquisition of Nadella Terminal at Mangalore and Ruchi Terminal at Kochi. Strong clientele base. Aegis Logistics has a robust client base that includes Shell, Reliance, HPCL, ONGC, Hull, and Bombay Dyeing, among others. The company has pipeline connectivity with major customers like HPCL and BPCL, which has facilitated long-term relationships with these clients. (1997) Finalized a joint venture with Perstorp AB to enhance pentaerythritol production capacity to 15,000 MTS per annum with advanced technology. 1998 Petrochem division spun off into a joint venture with Perstorp AB, constructing a 15,000 MT plant aiming to be the lowest cost producer in Asia. Amalgamated Amit alcohol business leading to lower manufacturing costs and better price realization. Oleochemicals division implemented a major cost-cutting program for significant savings. In 1999, commissioned an LPG terminal contributing to revenue through management fees and lease income. A court case against it was dismissed. Petrochemicals division hived off to joint venture with Perstorp Aegis Chemicals Limited, PACL. 2000 expanded liquid terminal division capacity by 40%, aiming for a market-leading position in Western India. Entered LPQ marketing and distribution, leveraging a new refrigerated storage facility. Renamed to Aegis Logistics Limited to better reflect focus on logistics and distribution. 2001 initiated Project Millennium to increase tank storage capacity by 45% at Mumbai port, with completion expected by March 2002. Awarded a tender for 2 additional pipelines and planned a new berth at Mumbai port on a build-operate-transfer basis. Expanded LPG marketing and distribution, becoming a leading private sector player. Initiated a significant expansion of the liquid terminal business to support increased capacity and regional market growth. Achieved ISO 9001 and ISO 4001 certifications for the liquid terminal division, enhancing service quality. Explored new growth opportunities in LPG distribution with the anticipated deregulation of the Administered Price Mechanism, APM. 2003, invested in Perstorp Aegis Chemicals Limited, PAL, through a rights issue to support cost reduction and improve profitability. Planned expansion to a second site for liquid logistics to increase capacity and regional market presence. Targeted growth in the auto LPG sector amid anticipated regulatory changes. 2004, initiated expansion of logistics capacity with the construction of a new mini terminal and stainless steel tanks. Entered propane marketing and diversified into auto LPG retailing. Decided to close the chemical distribution division due to poor economics, ongoing disposal of assets. Began construction of a new, cost-efficient plant in Perstorp Aegis Chemicals Limited, PACPL, to improve margins. Divested 30% stake in Perstorp Aegis Chemicals Pvt Limited to Perstorp NV. Commissioned the first franchised auto LPG station. Initiated a major growth program with plans for acquisitions and greenfield projects at major ports. Rationalized and upgraded operations at Trombay to handle high-value chemicals. Expanded propane sales and maintained margins through judicious purchasing. 2006, commenced work on expanding liquid logistics capacity at a second site. Integrated into pipeline networks of 2 major oil companies in Mumbai. Expanded autogas retailing with 2 new stations in Ichalkaranji and Jalgaon. Explored expansion into propylene gas storage and logistics. Planned to increase LPG propane import facilities by 5 to 20%, by 2007-08, developed a strategy to establish a national network of logistics facilities at major and minor ports. Start 2007, acquired the largest private liquid terminal in Kochi, near completion of expansion at Mumbai Port's second site. Successfully entered the operating and maintenance O&M contract market by winning a contract for MRPL Inland Tank Terminal in Kerala. Commissioned 10 autogas stations with 70 more in progress across 6 states. Expanded propane gas distribution significantly in western India. Established the Aegis Autogas brand with several stations commissioned in Maharashtra and Gujarat. 2008. Completed the Trombay 2 project, boosting capacity by 46%. Acquired Hindustan Aegis LPG Limited HALPG terminal. Expanded autogas retail outlets, nearing 40 operational stations by March 2008. Planned construction of a 4th terminal at Haldia. Achieved significant growth in propane sales to industrial customers. Ongoing integration and upgrade of the Kochi terminal. Entered into operating and maintenance O&M contracts for third-party terminals. 2009. Approved merger with Tapi Finvest India Private Limited. Completed 55 autogas retail outlets with plans for further rollout. Continued development of a national network of oil and chemical logistics terminals and retail gas distribution. Implemented Lean Six Sigma projects for infrastructure and operational enhancements. 2010 acquired Shell Gas LPG India, enhancing the LPG business with an import terminal, bottling plants, and a distribution network in Maharashtra and Gujarat. Formed a strategic alliance with SR Oil Limited for cross-selling fuels at retail outlets in 7 states. Continued development of port terminals and gas stations with significant expansion plans in Mumbai and Kochi. Entered the commercial industrial packed cylinder market with the new Pure Gas brand. Implemented state-of-the-art SAP ERP software to strengthen internal controls and improve operational efficiencies. 2011. Completed the acquisition of Shell Gas LPG India, which was rebranded as Aegis Gas LPG Limited. Subsidiary Aegis Gas LPG Limited acquired 100% shares of Hindustan Aegis LPG Limited, activated an overseas subsidiary for international LPG sourcing and shipping. Entered into a deal with APM Terminals for 100 acres at Pipavav for a storage complex. Awarded an operations and maintenance O&M contract for Bharat Oman Refinery Limited (BRL) in Madhya Pradesh. Expanded LPG terminal capacity and began propane gas supplies to key clients. Laid new pipelines at the Kochi terminal for larger cargo handling. 2012 new projects. Commenced the Haldia terminal project in December 2011. Capacity expansion, Pipavav Port Phase 1 nearing approval with a 120,000 KL liquid capacity addition. Operational contracts, secured more operations and maintenance O&M contracts with national oil companies. Marine Products, launched the Marine Products business in January 2012, supplying bunker fuel to ships. Subsidiary formation. Established Aegis International Marine Services P. Limited in Singapore for marine fuels and products. EPC contracts, awarded contracts by ONGC and BPCL for terminaling and logistics facilities. 2013 new liquid terminal, commissioned a 60,190 KL liquid terminal at Haldia Dock Complex. Expansion at Pipavav Port, initiated construction of a 120,000 KL liquid terminal and an additional 2,700 MT of LPG storage capacity. LPG retail network growth, expanded the autogas stations network to 94 and increased commercial industrial distributors to 40. Government policy reforms, benefited from LPG subsidy reforms and the Direct Benefit Transfer (DBT) scheme. Greenfield projects, progressed on bulk liquid terminal projects at multiple ports, including Haldia and Pipavav, to expand market reach. Change in hedging policy, adjusted the foreign exchange hedging policy to limit risks. 2014 expansion projects, commissioned a new liquid terminal at Haldia Dock Complex and partially commissioned a liquid terminal at Pipavav Port. Ongoing expansion of liquid and gas terminal capacities at Pipavav Port. New market penetration, expanded facilities at Haldia and Pipavav to service new regions, including northern and northeastern states of India, as well as Nepal. Strategic acquisitions, acquired bottling plants in South India to expand the gas retail distribution network. 2015 joint venture, entered a joint venture with Itochu Corporation selling a 40% share in Aegis Group International P. Limited to Itochu Petroleum Co., aiming to boost market share in India's LPG imports. New projects secured 5 acres at Kandla Port for a new terminal and began construction on additional LPG storage spheres at Pipavav, increasing storage capacity. Operational expansion. Installed rail loading facilities at the Pipavav terminal to enhance multimodal logistics capabilities. 2016 expansion of LPG storage. Tripled LPG storage capacity at Pipavav to 8,100 MTL. New projects commissioned a fully refrigerated LPG terminal at Haldia Dock Complex, 25,000 megaT capacity, 1,500,000 MT throughput. Expanded the Haldia Liquids terminal by 25,000 KLs. Constructed a new 100,000 KL liquids terminal at Kandla. Debottlenecking project. Increased throughput at the Mumbai LPG terminal via pipeline connection to the Uran-Chakan pipeline. Land allotments. Secured land at major ports for future terminal developments. 2017. New projects. Completed construction of a fully refrigerated LPG terminal at Haldia Dock Complex with a 25,000 megaT capacity. Expanded LPG storage capacity at Pipavav from 8,100 megatons to 18,300 megatons. Initiated a 100,000 KL liquid terminal project at Kandla. Operational developments. Commissioned an additional 2,700 megaton LPG storage capacity at Pipavav. Debottlenecked the Mumbai LPG terminal by connecting it to the Uran-Chakan cross-country pipeline. 2018. Commissioned a new fully refrigerated LPG terminal at Haldia with a capacity of 25,000 MT. Expanded LPG storage capacity at Pipavav from 8,100 MT to 18,300 MT. Completed the debottlenecking project at the Mumbai LPG terminal, improving throughput capacity. Recently commissioned a new liquid terminal at Kandla Port with a capacity of 100,000 KLs. Announced the implementation of a new liquid terminal at New Mangalore Port with a capacity of 25,000 KLs. 10th 2019, new LPG terminal at Kandla, announced with a planned capacity of 45,000 MT and a cost of 350 crore. Scheduled for completion in the first half of FY 2020 to 2021. Expansion projects approved additional storage capacities at Kandla, 40,000 KLs, Mangalore, 50,000 KLs, and Kochi, 20,000 KLs. Expected completion ranges from FY 2019-2020 to FY 2020 to 2021. Increase in LPG storage at Pipavav. Expanding by 3,800 MT with new spheres and a railway gantry, with completion expected by FY 2020 to 2021. Sealord Containers Limited became a wholly owned subsidiary of Aegis Logistics Limited as of December 31st, 2018. 2020. Kandla LPG Terminal. Construction began on a new LPG terminal with a planned capacity of 45,000 MT and a throughput capacity of 4,000 MT. Project cost, Rs 350 crores, expected completion by FY 2020-21. Expansion projects. Additional liquid storage capacity of 40,000 KL at Kandla Port, completed by FY 2020. New storage capacity of 50,000 KL at Mangalore, expected by FY 2021. Additional 20,000 KL bulk liquid tankage at Kochi Port, expected by FY 2021. Expansion of 12,000 KL bulk liquid terminals at Haldia, expected by FY 2021. Increased LPG storage capacity at Pipavav by 3,800 MT, with new spheres and a railway gantry, expected by FY 2021. Chash 2021, commissioned Pipavav rail gantry, expected to boost LPG volumes. Expansion projects, Mangalore liquid terminal expansion completed, generating revenue. Kochi Port bulk liquid tankage expansion underway, expected completion by H2 FY 2022. Kandla LPG terminal nearing completion, expected by the end of H1 FY 2022. Haldia bulk liquid terminal expansion partially commissioned, revenue generation started. Retail LPG growth. Expansion plans for Aegis Pure Gas, Magna, and Chota Sikanara brands on a national scale. 2022 acquisitions. Acquired a 100% stake in CRL Terminals Private Limited for INR 199.92 crore. Acquired liquid tank terminals with a capacity of 500,000 KLs at Kandla Port from Friends Group for INR 265 crore. acquired an additional 4,090,000 equity shares of Aegis Vopak Terminals Limited from Vopak India BV, increasing the stake to 51%. New projects and expansion. Commissioned Kandla LPG terminal with a capacity of 48,000 mectays. Expanded bulk liquid terminals at Mangalore and Haldia, adding significant capacity. Initiated expansion plans for LPG terminals and liquid storage at Kochi, Kandla, and Mumbai. Strategic transactions. Transferred key business units to Aegis Vopak Terminals Limited as part of a restructuring strategy. Sold 100% equity stake in Konkan Storage Systems, Kochi Private Limited to Aegis Vopak Terminals Limited. 2023 completed joint venture. Aegis formed a joint venture with Royal Vopak, Aegis Vopak Terminals Limited, AVTL, enhancing its market position and acquiring Friends Group assets in Kandla. Expansion projects. Initiated a significant investment program of 1,750 crore for increasing LPG and liquid storage capacities at Pipavav, Mangalore, Haldia, and JNPT ports. Began construction of a 110,000 KL liquids terminal at JNPT and a new LPG terminal at Mangalore, which will be India's largest cryogenic LPG terminal with an 80,000 metric tons capacity. Completed developments. Operationalized the new LPG terminal at Kandla, expanded liquid terminals at Haldia and Pipavav, and commissioned a new LPG jetty pipeline. 2024 joint venture growth. Aegis Vopak Terminals Limited, AVTL, expansion with Royal Vopak, leading to several smaller acquisitions and solidifying Aegis as a major tank terminal operator in India. New projects. Initiated a 1,750 crore investment program to increase LPG and liquids capacity at Kandla, Mangalore, Kochi, and JNPT ports. Acquisitions. Acquired a specialized storage terminal with a 44,168 KL capacity at Mangalore and a 16,000 KL liquid storage terminal at Kochi. Aegis Logistics has demonstrated a dynamic financial profile over the past decade. Sales have experienced significant fluctuations, starting at 3,981 crores in 2013, reaching a peak of 8,627 crores in 2023, and then falling to 7,046 crores in 2024. This variability suggests the company operates in a volatile market or is undergoing strategic changes. Despite these fluctuations, the peak sales figure in 2023 highlights a year of exceptional performance. In contrast, Aegis's net profit has shown consistent growth, rising from 35 crores in 2013 to 672 crores in 2024. This substantial increase reflects the company's effective cost management and operational efficiency, indicating strong financial health despite the sales volatility. An examination of the balance sheet reveals key insights. Total assets have surged from 1,005 crores in 2013 to 7,929 crores in 2024, illustrating Aegis's aggressive expansion and investment strategy. However, total liabilities have also risen, indicating increased debt likely driven by investments in fixed assets and growth initiatives. Equity capital has remained stable at around 33 to 35 crores, suggesting minimal reliance on new equity funding. Meanwhile, reserves have grown significantly from 276 crores to 3,859 crores, demonstrating the company's focus on building a financial buffer for long-term stability. Regarding growth metrics, Aegis has experienced a modest 3% annual sales growth over 10 years, with a more impressive 22% growth in the last 3 years. However, recent trailing 12 months have seen a sharp 23% decline, suggesting potential short-term challenges. Profit growth has been robust, with a 25% increase over 10 years and an impressive 36% growth over the past 3 years. This indicates strong operational efficiency and profitability. Stock performance has been notable, with Aegis achieving a 36% compound annual growth rate, KGR, over 10 years and a remarkable 100% KGAR in the past year, reflecting strong investor confidence and recent market success. Finally, the return on equity ROE has been consistently strong, averaging 15% over 10 years and improving to 16% in the past 3 years. This stability in ROE signifies effective use of shareholder equity and solid financial management. In summary, Aegis Logistics Limited presents a compelling mix of long-term growth and recent volatility. The company's impressive profit growth, stock price performance, and stable ROE underscore its resilience and potential. While the recent decline in sales may indicate short-term issues, Aegis's strong financial metrics suggest underlying strength and future opportunities. Investors should weigh the short-term challenges against the company's robust profitability and growth potential to assess long-term investment prospects. SWOT analysis of Aegis Logistics Limited. Strengths. Industry leadership. Aegis Logistics is a leading player in the Indian oil, gas, and chemical logistics sector, boasting a comprehensive network of bulk liquid handling terminals, LPG terminals, and gas stations. Strong clientele. The company has established long-term relationships with major industrial clients such as Shell, Reliance HPCL, and ONGC. Robust certification. Aegis holds multiple certifications including ISO 9001-2008, ISO 4001-2004, and OAS 18001-2007, ensuring high standards in quality, environmental management, and occupational health and safety. Weaknesses. Sales volatility. Sales have exhibited significant fluctuations, peaking in 2023 and declining in 2024, indicating potential vulnerability to market changes or internal challenges. High debt levels. The substantial increase in total liabilities suggests that the company has a significant debt burden, which could impact financial stability and flexibility. Opportunities. Expansion projects. Major investments in new terminals and expansion of existing facilities at ports such as Kandla, Mangalore, and JNPT will enhance capacity and market reach. Joint ventures. Collaborations with Vopak and Itochu provide opportunities for growth in chemical storage, LPG sourcing, and renewable energy sectors. Threats. Market volatility. The recent sharp decline in sales highlights potential exposure to market or economic fluctuations. Regulatory risks. Changes in government policies related to oil, gas, and chemical logistics could impact operational and financial performance. Conclusion. Aegis Logistics Limited is a prominent player in India's oil, gas, and chemical logistics sector with a strong infrastructure and key client relationships. Despite its leadership and operational strengths, the company faces challenges such as sales volatility and high debt, which could affect financial stability. Opportunities for growth through expansion projects and strategic joint ventures with international partners offer potential for increased market reach and diversification. However, Aegis must navigate market fluctuations and regulatory changes to sustain growth and enhance operational efficiency. Addressing these challenges while leveraging growth opportunities will be crucial for the company's continued success. If you enjoyed this video, don't forget to hit that like button, subscribe for more content, and ring the bell to get notified of our latest updates. Share your thoughts and questions in the comments below. I'm excited to hear from you. Thanks for tuning in. Remember, knowledge is power, and we're here to empower you. I'm Zayd Haji, a student of Business and Market Research, signing off. Stay curious and keep learning. See you next time.